The national portion of the real estate exam requires a precise understanding of mortgage clauses, including acceleration, alienation, defeasance, and prepayment clauses. When studying for the exam, you must realize that these clauses define the rights of the lender and the obligations of the borrower in various scenarios. Starting with the acceleration clause, you should visualize a lender speeding up the payment clock. Under normal circumstances, a borrower pays over 30 years, but if they default by missing payments or failing to pay property taxes, the acceleration clause gives the lender the legal right to declare the entire debt due and payable immediately. On the exam, look for trick questions that suggest a lender must wait until the end of the loan term to sue for the full amount. This is false because the acceleration clause is specifically designed to prevent that delay. Another common trap is the failure to maintain the property or insurance. The exam may ask if a lender can call the loan due if the borrower allows the property to fall into severe disrepair. The answer is yes, because this is a technical default that triggers the acceleration clause. Moving to the alienation clause, also frequently called the due on sale clause, the focus shifts from default to the transfer of ownership. The exam will test your ability to distinguish this from acceleration. While acceleration is about the borrower doing something wrong, alienation is simply about the borrower selling or transferring the interest in the property. If a homeowner sells their house to a buyer who wants to assume the existing 4% interest rate mortgage, the alienation clause allows the lender to prevent that assumption and demand the full balance. This protects the lender's ability to lend money at current, potentially higher market rates. You must remember that if a mortgage contains an alienation clause, the loan is generally not assumable without the lender's express permission. The defeasance clause is perhaps the most critical for the exam because it is the only clause that is absolutely required in a mortgage. The word defeasance refers to the act of rendering something null and void. In this context, once the debt is paid in full, the defeasance clause defeats the lender's claim. On the exam, you will see questions about what happens when a borrower makes their very last payment. The lender is required by the defeasance clause to issue a satisfaction of mortgage or a release of lien, which clears the title for the owner. This is the clause that protects the borrower's equity and legal title once they have performed their side of the contract. Be careful with wording that suggests the lender can keep a lien on the property after payment is made. This would be a violation of the defeasance principle. Lastly, the prepayment clause outlines the borrower's right or lack thereof to pay the loan off early. Lenders profit from the interest collected over time, so early payoff represents a financial loss for them. Some mortgages include a prepayment penalty to offset this loss. The exam might present a math problem where you have to calculate a 2% penalty on a remaining balance of $200,000. Alternatively, it might ask which clause would be absent in a loan that allows for early payoff without any extra fees. To keep these four straight during the high pressure of the exam, use the mnemonic AADP. Acceleration is for default, alienation is for sale, defeasance is for payoff, and prepayment is for early payment. If you can distinguish the trigger for each clause, you will successfully navigate the mortgage section of the national exam.